Kitco News, special coverage of the New Orleans Investment Conference, is brought to you by Uranium Energy Corps and U.S. Gold Mining.
Welcome back to Kitco News, on location at the New Orleans Investment Conference. I'm Jeremy Szafron. Thanks again for tuning in. Be sure to hit the subscribe button. We got a great guest coming up. My next guest says that it's not about Bitcoin making all-time highs. It's about the U.S. dollar and other currencies making all-time lows. Here to help us grasp some macro themes driving the current market trends is James Lavish. James, great to see you.
Very good to be here. Thanks for having me.
Let's start with this. Let's break it down for the viewers. Obviously, crypto, as we speak, I mean, we're sitting here watching it live. We could be breaking that $100,000 mark, a huge momentum, but you believe that the weakness is because of you believe that the momentum here is because of the weakness of the fiat, the weakness of the dollar. So break this into the audience. What's happening here?
Yeah, I mean, we've been seeing this develop for years now. And as you and I were talking about right before the show, the younger generation is catching on, and you have this movement now, people understanding what fiat is. Yeah. So just like 2 or 3 years ago, nobody spoke in terms of fiat versus hard money, and so as we've had awful, debilitating inflation for this younger, especially for this younger and lower demographic, population. They're catching on. It's hard for the Fed to hide it now. It's hard for the central banks across the world to hide it now. And people are catching on to the fact that there's money printing, there's expansion of the money supply. With expansion of the money supply comes inflation, asset inflation particularly. It bleeds over, since we're so financialized, it bleeds over into the economy. And it's making it impossible for a younger generation to buy homes, to get loans at rates that they can buy a car. Their insurance payments have gone up, their rent payments have gone up, and forget about the grocery bill. It's demeaning and it's frustrating. And so the movement into crypto, there's kind of, two categories, as I believe in. There's the Bitcoin movement, where people understand that is truly hard money. It's literally digital gold, and you can store value there. And there's a store of value for a long period of time. Whether or not it's, the volatility, people are accepting it, and they know that long term it's worth it to save your money in something that is anti-inflationary rather than debasing like a dollar.
Yeah, I mean, here we are at the New Orleans Investment Conference. How many gold bulls are your fans? I mean, there has been a really nice movement, right? Because we understand that the debasement of the currency is happening, and I almost find that people in gold bugs, they're also looking at Bitcoin. They're just, maybe it's FOMO effect.
Yeah, it's kind of funny because there are some old timers, OGs in the gold industry that have been doing this for so long. All right, so. The way it's been described to me by Larry Lepard, is one of my partners in my hedge fund, is they've been fighting a battle here for like 30 years, and it's finally coming due. And so when they hear about Bitcoin and they hear it's digital gold and it's the next thing, I think what goes to their mind is, I don't want to fight this battle for another 30 years with just a new asset, So that's one thing that's out there. The second thing is it's difficult to understand. Bitcoin's not easy to understand. It took me a long time. I mean, I was an institutional investor, so I just hammered the mic, but I was an institutional investor for almost 30 years. And it took me a good 3 or 4, it took the third time I finally heard about it, and I started to study it rather than just dismiss it. Yeah. It's a difficult concept to get your head around. And then once I started to study it, it took me a while to really get my head around what it meant and why it was a sea change in finance and for hard money. But the reality is, gold and Bitcoin, the people who follow gold and Bitcoin, hard money enthusiasts in particular, they believe in everything. They're like super aligned with all their thoughts and reasoning and understanding what's going on with the debt and the expansion of the money supply, and and how this can be protective for them. But there's just that one, like right at the end, there's some that just haven't made that leap to understand it yet. So I gave my talk yesterday, and by and far, I think it was well received. I haven't talked to too many people about it yet, but there were a lot of people taking photos of my slides, and I could see people super engaged, and then there were some audible sighs, and my whole thing is like, don't be hyperbolic about the prospect of Bitcoin. Just lead people to understand why it's different, why it's so important, and help them get to the point where they really want to dig in themselves and do some more research themselves and get comfortable with it. It takes a minute. And so, but I believe that there's a lot of people in here who are super open to it.
Is it mostly just volatility that scares people? I mean, or is it, a lot of people are talking about that they're revaluing currency and the fiat is kind of dead and we're putting money towards these hedges. And then there's other people that go, okay, well, the price action that we're seeing right now is just because Trump's in. How much of that is the case?
Well, I mean, look, we operate in 4-year cycles, as we've seen. It's a small data set. There's only a few cycles that we can look back to, but that's what has happened in the history of Bitcoin. It's only been around for 15 years. But we are getting at the end of this consolidation phase of this cycle. And so people expected for that to that consolidation to kind of finally close down, and then for us to get some price momentum through and start reaching all-time highs again. Coincidentally, people talk about it being tied to the halving and how it has miners and the price of creating the reward and all that. But in reality, it might be more tied to elections now and just the uncertainty around elections. So getting through that election was a huge inflection point. It took out a lot of uncertainty from the market. Okay, why? Well, first of all, financial uncertainty. Who's going to be more pro-business and who's going to be pro socialism, more pro-government rather than pro-business. And so now that we have Trump, we know that he is very pro-business. He is going to deregulate. He is going to drill. He said drill, baby, drill so many times. And so there'll be kind of hopefully an energy boom here, which will lower prices for energy, which will help inflation. However, on the flip side, it could help productivity, which is really important. We have not, what we've been experiencing the last 4 years is that with each incremental dollar spent on debt, you're getting fewer units of productivity out of it. So you're getting an increase in debt that's going exponential, and your GDP is kind of flattening out. And that's a problem. And so, but with Trump, the hope is they can cut out a lot of the fat or all of the fat that we have in the government, reduce that deficit a little bit, open up some, bring down the regulation, perhaps use tariffs as a threat and get some advantage there, and then bring up our productivity, and all of that combined is positive for assets, right? So, and then on the backside of that is we've had an extremely antagonistic administration through Biden. And Harris was clearly just going to continue that on. I mean, we had a few sound bites that she wasn't, but it was clear that she was going to. So a huge development on that is that now we have Senator Lummis from Wyoming who's pushing the Bitcoin Act. This is a big deal.
Huge strategic reserve in the U.S. It would be massive.
Yeah, exactly.
But selling gold to get there.
Maybe selling some of it, not all of it, but acquiring enough Bitcoin that would match what the gold reserves are now. That's the idea, I believe. And so, but buying 1 million Bitcoin, so just think through that for a minute. Now, you're going to buy 1 million Bitcoin, 200,000 a year for the U.S. Treasury. What is every single country around the world going to do? They're going to think, well, that's 5% of the float right there. That's 5%. If we want to keep up and be a G20, and Bitcoin really does end up being a strategic asset for the world, for a store of value, then we better get in there and buy some too, or we're not going to be able to be one of the top 20 holders.
So at these levels, James, I mean, is it FOMO? Is it too late to get in? Are you buying the haircut? What's the outlook here? I mean, where do we go?
Yeah, it's a good question. I get that all the time now from people I told to buy it when it was in the 20s.
Of course. Yeah.
But I believe that it's still a tremendous risk-reward investment. for the long term. Will we see volatility? Fully expect it. We could bump up here against 100,000. I mean, we're right at 99.2 right now, and so we could bump up against that level, kind of push through, have a lot of shorts pile on, and then have it collapse back down into the 90s or even in the 80s. I don't know. Bitcoin is volatile. Yeah. So I expect volatility. I still expect volatility, but I expect it to really have come into its own this year with some of these catalysts.
Okay, so a lot of support there on the technical side too. I mean, it looks like it's overbought.
It looks like it. Of course it does. It always does when it goes into this phase, right? I mean, I look back at the historical charts and it just blows my mind. I haven't lived through a bull market because I came into this industry late. I came in after 2020, early 2021. And so I came in right as we were entering that awful bear market. But when you look at those charts, it's just mind-blowing. You're like surely that can't happen again.
Yeah, I want to get to, I'm going to get your outlook on Bitcoin. We've got lots to get to, but I must ask you because we have this upcoming FOMC meeting, and on the back of all this, $100,000 Bitcoin, all-time highs on gold, we have $36 trillion in debt. So what's the Fed going to do?
Yeah, that's a good question. So first of all, how successful is the Department of Government Efficiency, the Doge, through Musk? Are they able to cut through enough fat? The answer is it's really difficult to get down enough because our spending is just too high. And so the issue there is that our spending, it's not that we are spending at almost $1 trillion discretionary. Just put that aside. The problem is that we have so much that spending that's signed into legislation through entitlements, and then we have defense contracts, and then the interest expense on our debt. You're over $1 trillion in deficit just on those three things alone. So what are you going to cut? Are you going to cut the defense spending? Are you going to cut entitlements? You can't cut interest. That's a default on your debt. So the issue is they want to cut a lot, but in order to cut down enough to get to get out of deficit, you're going to have to cut into the muscle and bone, and that's an issue. Okay, so let's put that over there. Now you've got your Fed meeting coming up. We've seen some conflicting economic data, right? So the Fed has lowered interest rates by 75 basis points in the last two meetings, 50 and then another 25. At the same time that they did that, the long bond has actually risen in yield. So the 10-year yield went from like 380 or 360 to now it's 430, 440. And so what is it telling you? Right? That's telling you that investors are expecting long-term inflation, or they want to be compensated because of interest rate risk, for premium risk. They want that premium because they're worried that there's going to be a deluge of bonds that comes onto the market. Why would they be worried about that? It's not that they think, oh God, they're going to be running so many deficits, right? That they're going to have to dump more bonds on. It's that we're running out of runway on the T-bill game. Okay, so for the last 2.5 years, 3 years, what's been happening is after we printed all that money, there was excess capital that was just sloshing around the market, and it went into what's called the reverse repo. The reverse repo is a facility that basically just allows the money market accounts, funds to just park capital there overnight with the Fed and get kind of a what's equivalent to a treasury bill rate, maybe even a little bit, just a little bit worse, but right there at that equivalent, okay, and have super liquid access to their capital, and they're just generating this return. Okay, so what has been going on for the last 2 years is that Janet Yellen and the Treasury has been drawing money out of that by issuing T-bills to cover the deficit. But there's only $200 billion left in that facility. So once that's gone, it's going to be difficult for her to find ways to continue to fund these T-bills with additional deficit. So what is she going to do? She's got to go out on the curve. And they've been playing this game, and they've been waiting, but now we're kind of at the end of that game. And now you're going to have to go out on that curve and the bonds know it.
Yeah.
And so they're like, okay, well, there's any way you cut it, any way you look at it, all roads lead to inflation, and that's the issue.
Yeah, that is the issue. So do you think we're going to see another cut just to service the debt?
Well, so to get back to your question, I wouldn't want to be Powell right now. This is a really tough position. So what does he do? He's got two mandates, right? You've got your mandate of stable pricing. We've seen inflation come down, but it's kind of stabilized here, like around 3%, depending on what measure you're using. But in reality, it's around 3% on the CPI-ish. So, but it's kind of stuck there. It's really been
2.6, just like hovering, really stuck.
Yeah, really somewhere between 2.5 and 3.2, somewhere in there, right? Okay, so, but then you've got some readings that we had recently that unemployment was ticking up. Okay, so they lowered rates just in case, because we can't have a recession. Okay, so, and that's his second mandate is full employment. So what do you do? Well, the third lever he's got is quantitative tightening. So we've been tightening by $25 billion a month, down from 60 earlier this year. It's not really a lot. I mean, he could stop that. It's really more of a signal than an impact to the market, in my opinion. $25 billion on what we're so far in deficit, that's almost nothing.
Right.
Okay, so what should he do? Well, he's up against an issue here that some people are calling for him to just start raising rates again. Well, it's just going to make the deficit worse, right? Because your interest expense is going to go back up. Okay, so that's not an easy path. The other thing you do is you can lower rates, continue to lower rates, and that could spark inflation again. So like we saw back in the 70s and 80s, you saw the inflation come down and then spike back up again. Well, then you had Volcker enter the equation, and he raised rates at a breakneck pace and stopped inflation. But he was able to raise rates to 20%. How do you do that with $36 billion or $1 trillion in debt? Okay, and you've got $2 trillion deficits that you're running, and you're about 124% debt to GDP. When he did it, we were at 30% debt to GDP. So when you do it now, it could be devastating. So that's not really a path that he can take. What do? Well, I described it yesterday on stage. I was like, it's kind of like he's got this jetliner that he's trying to land on a piano wire. Good luck. Yeah. I have no idea how you do it.
Yeah, especially in the current situation too, politically, right? Cut those rates just before the election. Here we are. We're not sure what's going to happen with the tariffs, as we talked about, this whole Trump presidency. Okay, I want to get back to Bitcoin because it's currently the 8th most valuable asset in the world, having just passed silver, and they passed Saudi Aramco, the largest energy company in the world, if you can imagine, which is nuts. You talked about maybe those levels coming down a little bit. Maybe we'll see that psychological 100,000, maybe a little bit of a sell-off. What does that look like? When does the pullback happen?
Yeah, I mean, you could see there's a lot of activity right around this 90 to 100,000 level, and it's natural. 100,000 level it's a mental level for investors, and so to get through that's a big deal. So, but we could push through it, and I almost expect us to push through it and then immediately pull back down underneath, and then struggle to get through it, because there'd be a lot of shorts sitting there, just trying to take advantage of that mental wall. So I do expect it to pull back a little bit, but long term, meaning end of year, early next year, I expect it to push through 100 and be on its way, barring any black swan event or economic event or the Fed coming out and saying we're going to raise rates. I mean, that would be a market shock. So, but status quo, I do expect it to just continue on forward, because we have a number of catalysts that we haven't even discussed yet that are right here on the horizon or happening.
How much of that is the war risk?
I think that that's hard to gauge, right? Because war risk will help gold, right, obviously. It really depends on what happens with the dollar and rates, because risk assets typically don't do well. The question is, how close are we to cresting over that? We have to emerge. Bitcoin has to emerge out of risk and into risk off. From risk on to risk off, as people understand that oh, this is a place to store my value for a long time. Just forget about the volatility. This is a place to tuck it away and trust that it's going to be okay. Much like gold, the difference is you can access it anywhere around the world. So if something happens in your home country, if you're in a hostile area, you can just pick up and leave, know your 12 words, and your Bitcoin, you're not taking it with you. Right. It's everywhere. It's wherever you go. As long as you can access the internet, you can get to it.
Yeah. Fascinating, hey? Okay, well, we're going to talk about MicroStrategy. Obviously, in the news, the company has the largest corporate Bitcoin holdings, and it's holding new record levels, 331,200 coins as of, I think, yesterday. In your latest newsletter, you kind of broke down the strategy. Could you do that for the audience?
Sure. So Michael I've talked to Michael a few times about this, and he and his team are so smart. Yeah. They figured out something, that we're calling a money glitch. What's happening here is that because MicroStrategy has an underlying business that is an operating company that is generating revenue, he's got revenue that he can use to pay interest on on his borrowing, on his notes or convertible bonds.
0%.
Well, if you blend out all the bonds that he's issued so far, he paid down some early debt that was more expensive, but now he's got almost, let's see, it's got 4 or 5, I think it's $7 trillion, $7.3 trillion now of debt, convertible bonds, that are under a 0.8% rate annualized. So under 0.8. That's just mind-boggling. The latest note that he just issued yesterday, that he just floated, was $3 billion, and it was a 55% premium on the conversion premium at 0% interest. 0%. Okay, so now why is he able to do this? The reason he can do this is because he took so much capital that he had and he started buying Bitcoin. Well, that made the value of his company attached to Bitcoin. And what does Bitcoin do? It does this, right? So it's super volatile, but it's volatile on the way up. So that's really good. So what he's been able to do is he's been able to offer these convertible bonds to convertible bond buyers who are typically hedge funds that will buy those bonds. They'll take that premium. They'll say, well, now I've got a call option on it, meaning if the price of the stock goes up, I can convert my bond and have the upside to the stock. Great. So all those bonds that he issued are in there. They have huge profits in them. That's number one. The second thing you can do as a hedge fund trader is what you do is you delta hedge around that stock. So you'll see that there's a lot of short interest on MicroStrategy. A lot of that has to do with bond traders, these convertible bond traders that are shorting stock against that convertible bond because it's convertible into stock, and you can do it in a certain ratio. It's called delta hedging, where you can trade around that volatility and make money as it goes up and down. So that's a very attractive feature. Those two things right there allow Michael to issue those bonds at near zero or at 0% interest. The third thing he can do is he can issue stock. What happens? Well, when he goes in, it's called the ATM. It's at the market. He just floats more stock, a secondary. So he floats more stock into the market, and when he does that, those shares, he gets money for those shares. So say he floats $100 million worth of stock. Okay, he'll turn around and take that $100 million and go buy $100 million worth of Bitcoin. But because his stock is trading at a premium to the underlying NAV of the Bitcoin, it's like right now it's about 3x premium. So because of that, he can turn around and go buy the Bitcoin, and his stock goes up. It's mind-blowing. So typically when you issue stock, it's a dilutive event.
Of course.
It dilutes the earnings. Of course, you understand this, but for your viewers, it dilutes your earnings. And so your stock would go down because it's dilutive. But he's issuing stock, he's taking that money, buying Bitcoin, and the stock goes up. So it's actually an accretive transaction. It's mind-blowing.
What do you say to the people that go, okay, I want to buy a Satoshi, or do I buy a MicroStrategy stock? I mean, where's the exposure? What do you do here?
It really depends on, your personal situation, what kind of risk you want to have.
Right.
The risk of MicroStrategy, and Michael knows this, is that the premium, that almost 3x premium to underlying Bitcoin collapses. Now, it doesn't necessarily mean you'll lose money if Bitcoin keeps going up. It's just that you will not have that 3x, multiplier on it. If Bitcoin stays at the same price and that premium collapses, you'll lose money. Everybody, you just have to understand that. My recommendation is to get your core holding of Bitcoin, whatever position you're in. Figure out what your situation is. Get your core holding of Bitcoin, and then you can add to that. You can augment it with things like MicroStrategy. But I would say, and Michael's asked this question this morning on CNBC, well, why would somebody buy MicroStrategy when they can just buy one of those leveraged future ETFs? Well, the answer is, and Michael explained it, he explained on the asset side where you can buy MicroStrategy and you actually have an asset on the balance sheet that's attached to its collateral right there, right? Whereas if you're buying something that's a 2 or whatever X lever of Bitcoins using futures, there's really nothing there. And there's a cost to the way that they create those is through futures. And so there's a cost to keep building that future book, and it eats at that premium that, you're not really getting 2x. So I personally don't love those. I personally do own MicroStrategy, and full disclosure, my hedge fund owns MicroStrategy. It's our largest position. So that is something that we understand it. We know where we think that it's a value and where we don't. And so, but it's for everybody to kind of make up really do some research on it and understand it. But that's what you're buying. So.
Okay, talk to me about the Citron report, big short seller report coming out. It did take the stock down a little bit. It was actually quite friendly. I remember when they have shorted other companies in the past, it wasn't as friendly. This one was like, we've talked to Michael. I think he was doing a really good job, but it's just gotten a little bit too hot. So they got a short position going. What's the strategy?
Well, I think it's dangerous. I've seen people short stocks that they thought were overvalued many times. This is a little bit different. And dangerous phrase, it's different this time, but this is a different situation than the ones I've seen, in that Michael's strategy right now, he's got a lot of momentum, and he can just keep issuing these bonds and buying stock, and it's accretive. The danger is that premium does collapse. Okay, so they're making the bet that the premium collapses before Bitcoin goes up enough that they lose money. And that's a tough bet. I personally would not do that. I think that's you're stepping in front of a freight train, because Michael's got a lot of momentum here, and he's got a lot of demand for those bonds. I mean, that thing was oversubscribed. I think it was supposed to be much lower, maybe $1.7 billion, and it ends up being $3 billion, completely oversubscribed. So, I would be careful with that. Are they right long term? Well, they can't go on forever. Yeah. The premium is only there because the current investors expect them to continue to do this for a long time. How long will that go on for? Well, Michael said that he thinks he can buy about 1 million Bitcoin. So if he's got, we don't know what he's been buying the last few days, but let's call it 350,000. He's a third of the way there.
So could he squeeze Citron here? Can you squeeze those shorts out? At what point?
Well, sure you could. I don't know. That would be an emotional thing. Michael's not very emotional.
Yeah.
They could get squeezed out easily. I would be cautious personally.
Okay, I got to talk to you just about the outlook for 2024 or 2025. We're already there, if you can believe it. It's exciting. We got Gensler out. He's announced he's leaving January 20th. Of course, don't know who's coming in, but they're going to be more pro-Bitcoin. What does this year look like with Trump in the presidency and friendlier people in the White House?
Yeah, it's first thing we talked about was Senator Lummis feels emboldened to start pushing that bill and bringing it to the floor. That's a really big deal. So that's a huge catalyst. We just had the SEC approve the options trading on the Bitcoin ETFs. Gensler's out. So these things are going to start happening. You're going to start seeing things like this happen, where the industry is going to have much clearer definition around it, much clearer rules around it. And so it's going to give professional investors, institutional investors, it's going to give them the confidence that this really is an industry they should treat separately and start allocating to. So that's one thing. The second thing is the banking debacle with Gensler and Warren and choke point 2.0. That was so painful. This last administration was extremely hostile to this industry, and that's gone. So that's been eliminated. And so now we can see forward to that opening up. And for your viewers don't know what choke point 2.0 is, it was where the officials, government officials, whoever they were, whether it was Elizabeth Warren or Gensler or whoever it was in their little group there, they were putting pressure on traditional banks not to have on-ramps and off-ramps to crypto or Bitcoin related companies. And so I even felt it in my hedge fund where we had subscriptions that were coming in from Wells Fargo or Bank of America. They would just get canceled. And they refused to send them because they were being sent to something that's called the Bitcoin Opportunity Fund. Even though we're a Delaware entity, we have all of our file work papered. We're completely transparent. We're basically a traditional hedge fund, and they wouldn't let them send the money. So it was a big headache for us for months to try to get around that. We finally did. That stuff we're not going to have to deal with anymore. That's on the horizon. That's going away.
Yesterday, when you were on the stage, I know you showed a chart, and we'll try and find it and show it too, but it was talking about, the assets out there. Bitcoin's still relatively small. I mean, it's getting a lot of more attention, but what's the momentum here? Are we just getting started? How do you destigmatize this? How do we go forward with this education campaign?
Yeah, so Bitcoin is just getting started. It's right about $1.7, $1.8 trillion asset right now in this chart, and I'll give it to you. We'll pull it up here, but this is my chart. It's a little bit different than the one that you've seen going around. I adjusted some of those for my current projections of where the assets are. But there are $900 trillion of global assets, investable assets. Bitcoin is currently 1.7 trillion of those, which is 0.02% of total assets. It's 1/10 the size of gold. So it has a long way to go here. But at $90,000, it's still only 0.2% of the entire investment universe. Now remember, it's 1/10 the size of gold, but gold's been around for thousands of years. Bitcoin's been around for 15. This is tremendous momentum, but a huge amount of space here for it to start taking some allocations from those other areas. Where will it take allocations from? Well, the obvious one is gold. Second obvious one is equities. The third obvious one is bonds. And then the fourth obvious one is real estate. So it's going to kind of go in that order in my mind, that investors are going to start realizing that, oh, this is digital gold. Oh, I should, instead of having my money in just equities and bonds, I should have some in Bitcoin. Oh, instead of having all of my money in real estate, and instead of looking for real estate investment opportunities, forget about your home, I should buy some Bitcoin instead. Why? Because it's liquid, it's trustworthy. It has a tremendous rate of return over the course of just 4 years. Every single 4-year period, it has a rate of return. So that's another thing. And then just doing quick math on it, it's 0.2% right now. At 1% of the total global assets, Bitcoin's a $9 trillion asset and worth about $450,000 per coin. At 3%, it's worth $1.3 million per coin. So we have a long way to go. I don't know when we get to that $1 million level. I expect it to be in the next 7 years or so.
We were talking to an analyst, and they said, okay, the people that are buying closer to this $100,000 range, or a lot of people that had FOMO, maybe don't have a lot of savings. What if they get squeezed here?
Yeah, so the hard part here is that you need assets, you need to hold assets. We do have an issue here, especially in America, but in the Western developed world, that there's a separation of wealth occurring. And it's the people who have assets and the people who don't. And the people who have assets can keep up with this inflation. My sincere hope is that we have a period here where, we have a productivity wave where the middle class comes back and is able to start accumulating wealth again. at the same time that they don't have assets yet. But this is going to go on for a long time.
Stay long, I suppose.
Yeah, I don't think that this is a 5-year event. This is going to happen for over a course of 20, 30 years. So people still have time.
Yeah. Fascinating. James Lavish is the managing partner at the Bitcoin Opportunity Fund. Of course, you can find him online. We got to get this whole thing on. All of your charts are fascinating. I'm going to show them on the show. Thanks, James. Appreciate your time.
Very good to be here. Thank you for having me.
Appreciate it. I'm Jeremy Szafron. For all of us here at Kitco News, we appreciate you watching. Don't forget to hit the subscribe button. We got more great guests coming up all week long from New Orleans Investment Conference, where it's the 50th anniversary. See you next time.
Kitco News, special coverage of the New Orleans Investment Conference, is brought to you by Uranium Energy Corps and U.S. Gold Mining.